Hello and welcome back to Coinscrum Markets. I'm delighted to be joined today by Francesco Renzi, co-founder and CEO at SuperFluid. Hey Francesco, thanks for joining us.
Hey, thanks for inviting. It's great to be here. I used to listen to your show, so it's cool to be on it.
No, absolutely. Now, look, we're here to talk about SuperFluid, which is the company project that you've co-founded. I noticed you guys were in the news last week, so we'll come on to that soon because you just closed a funding round with backing from some very significant investors in the space. And I guess the headline that caught my eye was that you're building money streaming services for DeFi. I guess that was definitely a protocol that you're developing for real-time settlement, which is super interesting. You know, as many people that have been kind of watching the crypto space for a while, they all know that transaction, for the promise it has, we still have issues around transaction costs and scalability. So this is definitely an area that needs addressing, and you guys are tackling it in a very different way. So I just wanted to get you on and hear about it. And before we start, I guess the best person to tell us at a high level what SuperFluid is you. So go ahead. What is SuperFluid?
Okay, so SuperFluid is an asset streaming protocol. Our objective is to bring subscriptions, salaries, and reward distributions to crypto native businesses, DAOs, and crypto native individuals. The way we do this is by innovating at the money layer. So we've created a new extension to the ERC20 standard, which we call super tokens. And these super tokens have what we call a dynamic balance. What this means is that it creates connections between accounts. And by doing this, it enables the flow of money without transactions. So let me give you an example. Let's say you are one of my contributors in my DAO, right? And I want to reward you with 10 cents a second, right? So using SuperFluid, you are able to connect the DAO's account to your account. And once that connection is established with a transaction, from there, that point on, basically, I will be able to transfer money to your account every second with no transactions. And this will be immediately reflected in your balance. So this is what we mean by dynamic balance. So your balance will literally tick up every block and mine will tick down every block. So the transfer is settled automatically every block, and there's no need for intermediary transactions. So we described SuperFluid as a very data efficient way of moving money, because effectively with one transaction on chain, I'm able to create a financial connection which is perpetual. So you will receive money forever, and I never have to touch the chain again. I don't even have to be online. There's literally no operations I have to do, and the money will just keep trickling. So we believe that it's a very scalable way to send money, both because obviously you only have one transaction, so the transaction costs can be reduced, but also because it provides you a very good experience. As a user, you only have one transaction. What this means is you don't have to go back to the chain. You don't have to sign anything. You don't need to be on your computer, right? Which is exactly the same experience we expect and demand from banks, right? Or from credit cards. When you subscribe to a service online with your credit card, you don't expect to have to do that more than once. Mm-hmm. And with crypto, this was never really possible. You never could do recurring payments. But with SuperFluid, you can do this, and it's a push payment. So you're not approving anyone to pull from your account, but rather you are always pushing the payment to them over time and forever. So it takes the best of crypto, which is total control on the user side, and bridges it with recurring transactions, which are something that has enabled Web 2 to become what it is, but wasn't really available until now in Web 3.
Yeah. I guess if we look at traditional payment systems and how things have evolved and managed to scale, you've got the idea of gross settlement, which you've got kind of between two parties, and the actual balance needs to be settled, resettled directly, or as has had to kind of evolve prior to that, mostly prior to that, between banks, is batch settlement and netting, where transactions are kind of processed at the end of the day and funds distributed on a net basis. How does this compare, I guess, in that sense, and how does this improve on that perhaps as well? And these, once you've got one of these streams open, is this a two-way thing? So that if I'm doing some work for you and you're then doing some work for me, are the payments going both ways the whole time?
Yeah, that's a really good question, and I hope your listeners are kind of technical enough to understand what we're talking about. But yeah, basically, SuperFluid is a mix between gross settlement and net settlement. So blockchains are traditionally gross settlement, right? So when you send some money, it's now in somebody else's hands, and the full amount is sent. In the case of SuperFluid, when you actually open a stream, you're not sending money. The money is actually sent at the end of the block. And everybody's money is settled at the end of the block. So at each block, there's a net settlement of everybody's streams. Okay. So it's like net settlement, but instead of batching at the end of the day, we batch at every block. So it's almost instant net settlement, which is something that's only really possible with basically continuous payments. So because we are paying every block, we can then net at every block. And by netting at every block, you can do some pretty amazing things. So for example, we've built a few applications on top of the SuperFluid protocol where the application itself has no balance, but has a high volume. So it's able to receive money and send it at the same time without needing to ever hold funds, right? As a user, if, for example, I'm receiving my salary in a stream, I'm able to pay part of that to my landlord, maybe put some of it in a savings account as I receive it. So literally the money goes from my account and instantaneously goes to where I want to send it. So it's instantly netted. It's probably a bit confusing at the beginning, but you get used to it. The result of this is, I think, a very, very capital efficient system. Effectively, you can have an account with no working capital, but that's moving funds automatically and without having to sign any transactions. So it's pretty interesting if you go down and look at what this enables from a financial point of view.
Yeah, well, I don't want to get too deep on the technicals again, but you mentioned capital efficiency there, and I mean, capital efficiency is why these kind of methodologies kind of materialize in traditional markets as well. And people have been looking and developing other kind of micropayment solutions for Bitcoin, for blockchain networks for some time, trying to tackle this exact problem. And you've got things like on Bitcoin, the Lightning Network, which is under development, and people across, I guess, more across the Ethereum ecosystem are looking at state channels. Again, not to dismiss those, for those are still kind of projects under development and may have their own use cases in time. But how do you think that your solution kind of overcomes some of those capital inefficiencies that might be there with some of those other solutions?
Yeah, so it's not just capital efficiency. There are a number of reasons. Well, okay, so first of all, let's just say they're completely different. So SuperFluid is a completely on-chain solution, while payment channels or state channels or Lightning Network are off-chain constructs, right? And this is a very significant difference because it means the systems have very, very different properties, right? First of all, I would just say SuperFluid is not made for on-demand payments. So if you want to just pay someone $1 now and then $5 tomorrow and $10 in a week, then SuperFluid doesn't work. SuperFluid is made for recurring payments. So if you want to pay someone a certain amount of money over time, then SuperFluid is a good solution, right? Because that payment is very easy to describe. And by describing it in a simple transaction, we're able to then execute it automatically. And that description is basically, I want to send Paul $1 a second, right? So when we tell the chain to send $1 a second to Paul, then it will start doing it, right? Which is why we can scale that very well. If you have spot transactions, then doing it off-chain is actually the best thing. So I'd say payment channels are great. But I think SuperFluid is much better for recurring payments. So there's a number of reasons why that's the case. I'd say the main one is capital efficiency. So with SuperFluid, you don't need to lock any capital. So as I was saying, you can have accounts with no capital at all that are just redirecting streams they receive from someone else. In the case of the Lightning Network, you would always have to have some locked capital in order for that to work. Plus net settlement. Net settlement is great because it means you can literally send funds instantaneously. And the Lightning Network, there would always be a delay. Obviously, computers are fast, internet is great, but you always have to wait to receive the money before you send it. In the case of SuperFluid, you don't. The money is actually moving at the same time. But the really big reason I think SuperFluid is a better way to do recurring payments is because you don't have to be online. So in the case of Lightning Network or payment channels, because they are off-chain constructs, you have to constantly be in connection with that off-chain network. And if you are not, then it's possible for you to lose your funds because the counterparty could withdraw to the chain and settle with incorrect data, right? There are a lot of people working on trying to make this not the case, but at the moment it is the case.
Yeah.
And as a result of this and the capital efficiency problem, right, the fact that you have to lock money in, at the moment, most Lightning Network applications, or let's say implementations that actually are getting success, are generally custodial. And I think that's it's a pity, right? Because it's not what our ecosystem should be about. We're trying to promote self-sovereignty and self-custody. So with SuperFluid, because the UX is much simpler, you simply sign a transaction and then you can walk away. I think it has a better shot at getting actually used for these kinds of payments. While with the Lightning Network, while it's an amazing feat from a technical point of view, I think the UX challenges are really keeping it back.
Yeah.
So I love it. I've used it, and I think it has a bright future. But at this point in time, I'd say we're solving different problems.
Yeah.
One extra thing I'll add is that because SuperFluid is a completely on-chain solution, it is much easier to build on top of it. So users can build applications that use streams inside of their DeFi applications, right? And this enables developers to really get creative and build composable applications that now have these connected balances. So yeah, we're seeing some really cool things. While with the Lightning Network, it's quite hard because everything is off-chain, so there's no way to have state, and it's just much more complicated.
Yeah. So, I mean, a couple of things you mentioned there as well, and I guess one of the big things and why some of the challenges that things like the Lightning Network still need to overcome, and one of the main things that we're looking to address here is around fees and bringing down the cost of transactions.
Yeah.
We've seen this sort of speculative frenzy across DeFi, and even that earlier in the year kind of limited, I guess, the benefits for people accessing and trading on the DeFi markets to those that were executing and trading over a certain value, and it was reasonably high at one point. Otherwise, the fees just didn't make sense. So, what does that look like? When and how are fees actually paid? I'm guessing they must be paid somewhere, even if it's just an entry fee and an exit fee. What does that look like for the user?
So in the case of SuperFluid, you pay when you interact with the chain, right? That's the case with Ethereum. When you send a transaction, you have to pay. And the way to think of it is when you're changing the agreement, right? So if I agree that I will send you $1 per second, then the moment I send this information to the chain, I have to pay, right? So there's one transaction. And then if I say I want to pay you less or more, so if I change that amount, or if I stop that agreement, so if I stop the stream, then I have to pay again. So you only pay when you interact with the chain. So there's either one if you never close the stream, or two, or three, or four interactions. But apart from that, the money streams without transactions. The way it works at the moment, the gas, I think, is about 1 or 200,000 gas, which I can't say in dollar values because it's just it changes every day. We are deployed on layer 2 solutions as well. So we're on chain on the layer 2s and on side chains. So there's a lot of opportunities to do extremely low cost transactions. And in the future, we'll be deploying to more layer 2s. So I think Ethereum is going to become more of a settlement layer, and people are going to use side chains and roll-ups or other off-chain constructions more often. And in those, gas costs become less of a concern. But at the same time, for us, it's more about scaling that long-term payment so that even if your upfront cost is slightly higher, you then literally never have to touch it again. And with higher value payments, that's even less of a concern, right? So at the moment, we're seeing quite a bit of adoption by crypto native organizations, both DAOs and more traditional companies, for paying salaries. Salaries, or contractors or community members, and for those they're paying rather substantial amounts, and they simply want to stream them. But opening the stream itself, it doesn't really matter how much it costs, because they're paying thousands of dollars a month, and once they've done that, they never have to sign again, right, until they decide to fire that person. And this is great for things like multi-sigs, because if you think about it, imagine running payroll with a multi-sig, right? Not only do you have to sign a bunch of transactions, but you have to sign those multiple times, because you have multiple multi-sig members that need to sign each transaction, right? So just scaling that to one single interaction makes the world of difference for administrative people. So we're seeing quite a bit of adoption in that.
Yeah, and I guess humans are generally the biggest risk in most of these things, and the more that they have to go back and interact with these, I mean, I know there's been some instances in the news where mistakes have been made by companies, and accidental payments have been made. So I guess the more you can limit that actual human interaction, the less room we do have for error. I mean, something you mentioned there, making it simple, and you're seeing companies already use this to manage their own payroll. Again, I think just before we started the call, we were discussing that we're generally on version 2 or version 3 of people attempting to address known problems that have been known since the very beginning, but we didn't necessarily have the right technology or infrastructure there to actually, or the demand perhaps, to actually solve these problems. And I think something like, we discussed how, I think it's still apparent that a lot of the use case for crypto is still based around speculation, but now we're seeing actual real use cases and solutions being developed. And I think I recall from the very early days of being at Bitcoin meetup, people discussing the need for, closed loop economy. Speculation is great and it's one thing, but for this to actually function as a useful payment networks and currencies, perhaps, then you need the demand for people to earn crypto, for them to spend crypto, an easy way for us to have that closed loop. And I think if you look back in 2013, you had companies like BitPay, you had Coinbase launching merchant services, and it was easy for a merchant to say, yeah, I'll stick your payments widget on my website, and people will spend Bitcoin.
Yeah.
That was a no-brainer for them to do. Was relatively cheap, perhaps cheaper than credit cards, but people didn't want to spend their crypto at the time, so and they weren't earning it. We don't buy our currency at the end of each month when we get our paycheck. We've earned it, and it creates a different psychology around that money, I guess. So do you think we're now on the cusp of that, this becoming a reality, where we're going to have both sides of the market, which actually make this useful for payments? Because now with stable coins, it doesn't have to be, if you don't want to be exposed to currency fluctuation, you can do this with stable coins, and you can do that internationally to some economies that might be closed off from traditional payment systems.
So it's not just that you can do it with stable coins, but it's that you can do it with stable coins while keeping your Ether or Bitcoin, right? Because you now use DeFi to lever up. So that's what a lot of organizations are doing in the space. They're not even spending their treasuries. They're literally borrowing against them in DeFi to pay for their ongoing expenses. So it's pretty remarkable how far we've come. I definitely think we're on the cusp of this, and I think enabling organizations to do this is the first step, because that's how money enters the system, right? And as you were saying, if you don't earn in crypto, you're not going to spend in crypto, because instinctually you're not going to buy something to then spend it. It just doesn't make sense, right? It's an extra step. So I think as more crypto natives appear, and I can tell you there's way more than you think already right now. There's a lot of people who earn their wages in crypto. But as that number becomes exponentially higher, hopefully with technologies like ours, I think we will start seeing a much more closed loop economy, because and this is the other interesting thing, when you start paying wages in crypto, you have a very strong reason to start accepting payments in crypto, right?
Mhm.
And when your workers start demanding to get paid in crypto because it's better for them for whatever reason, then you have an even stronger reason to accept crypto, right? So I expect we'll start seeing people making discounts or, you know, giving better payment terms. SuperFluid itself is a better payment term in a sense for the buyer, because if imagine you're subscribing to Netflix, right? If you pay every second, then you can also leave anytime, right? So you're less locked in. And we're starting to see organizations in the space adopt that on both sides, right? So not only are they interested in paying salaries in streams, but they're also interested in getting paid for their services in streams, which will then feed those salaries directly. So they never have to top up, and they can operate with lower deposits, right? So to answer your question, absolutely, we're on the cusp of this, and it's extremely exciting to be on the cusp of it.
No, it really is. Just want to loop back to one other thing you mentioned, and this was like, you know, maybe some of the other kind of layer 2 solutions out there haven't quite cracked it yet. They're on the right path, and to get ultimate efficiency at present might require an independent custodian. Even if we look on, you know, Ethereum with wrapped Bitcoin, or even, you know, fiat-backed stable coins, you're effectively, you're getting the efficiency of the network, but you're still trusting a third party ultimately as the custodian. And again, just going back to my kind of original thoughts from many years ago, you know, with this technology, you really want the network to be the custodian, so that you're not trusting an individual.
Yeah.
And it sounds like the way that you've developed SuperFluid, kind of that's how things are starting to pan out. These are all new things. We have to be realistic. We've seen it across the board. People know there's risks in this industry. It's new technology. Things do break. But the way that you've architected things, you know, where does that custody sit exactly, and what are potential risks that people should maybe consider, be aware of, and how you look to mitigate them?
Okay, first of all, SuperFluid is a non-custodial solution. So we don't hold user funds, we don't touch user funds, we don't move user funds. We literally just developed technology, and our technology was deployed to the network by community members, and you know, it's amazing, really. I mean, just build something useful and people will use it, and we didn't even have to deploy it ourselves. So that said, there's plenty of risks. Crypto is full of risks, and I would say that the main obstacle for adoption, in my eyes, is the fact that everything we do is still experimental. Like, no matter how many years pass, I still feel that we are very early, and there's still a lot of work we have to do. In the case of SuperFluid specifically, there are a number of risks. The simplest to explain is smart contract risk, right? We're building a smart contract system, which is fairly complex. It's achieving amazing things because it's daring to build something complex, right? And with complexity comes usually problems, and, you know, the broader surface for bugs, and with bugs can come loss of funds. We are very concerned about this. We are obviously doing all the due diligence we can. We are embarking on security journeys with specialized companies to try and improve this as much as possible. But the more I speak with engineers in the space, and the more it's clear that no matter how much you audit, no matter how well you write your code, there's always going to be the possibility of a bug. So that's something that users have to be extremely aware of. That said, because SuperFluid is so capital efficient, you can use streams without really needing to put too much capital at risk. And this in turn means that effectively, you know, the risk you're exposed to is as much as you want it to be. While if you're using the Lightning Network and something goes wrong, your whole kind of deposit is at risk. So yeah, there's a lot of risks. We have no intention of hiding them because, you know, we just built the system. It's experimental. We are currently calling it beta, but even if we weren't, people should still be aware that smart contracts can and do have bugs all the time. So everything on Ethereum, as far as I can tell, could break anytime. So you have to be a bit of a fatalist, but it's worth it.
Yeah. Do you see, just as more of a broader question in terms of how things are panning out within across like the Ethereum ecosystem and the ideas of smart contracts? Because the idea of like a full kind of Turing complete smart contract writing anything is great, but then as you've mentioned, there's a broader attack vector. Are we starting to see things kind of pull back and get towards something where there's sort of more primitives that could be used more broadly within the ecosystem, but then because they're kind of a smaller subset but a general use case, they can be trusted more and used as building blocks?
Yeah, absolutely. I mean, that's how the ecosystem matures, right? That's why Uniswap is so successful, right? People trust their code. It's battle tested, and people build on top of it. And as a result, it's the bedrock of exchange on chain, right? We aspire to be the same, but at the same time, SuperFluid is fairly more complex than Uniswap, and as a result, it's going to take some time before it's completely battle tested, right? So I do think what you're saying is correct. Like as some of the primitives become more widely used, you can, the degree of certainty that they won't break becomes higher. I just caution everybody to know that things can still break. It has happened. I can't give you exact details, but I remember that recently somebody found a bug in something that's been around for years already, and nobody found the bug, right? And that's it's normal. Like we're at the frontier, and at the frontier, bad things can happen. So,
look, I'm not again. I think it's just useful, especially for newcomers, that there are really these risks there. But I think we are seeing that over time, the longer things do last, they can become more trustworthy, and other layers of mitigation can be built in as well. So, all very interesting indeed. So, look, just want to come back. You mentioned at the top, you had some good news last week. You just closed a $9 million funding round. You had some really interesting, significant investors. Can you just tell us a little bit more about that, how that came about, what your investors were saying, and what that's going to open up for you in terms of roadmap?
Yeah, I mean, we just closed a $9 million round. It's our seed round. It was led by Multicoin Capital, but we had participation from a lot of different people. We assembled an incredible cohort of supporters, people excited about our vision of bringing these real-time capital flows to the blockchain ecosystem. And now we're just looking forward to spend the money, grow, scale as fast as possible. And on that front, we're aggressively growing our team. We're hiring full stack developers, Solidity engineers, marketing people, developer relation people. So we're really trying to scale up as quickly as possible, because what we've seen is that what we're building is very interesting to a lot of different people, right? We're building a protocol. Which means we're building a base layer. And so many different people want to build applications on top. We really need to scale up in order to support them and enable those people to build their own visions of what streaming assets could mean. So scaling up our team is the most important thing right now. We also are sponsoring a lot of hackathons. So there's this series called ETH Global, which is loosely tied to the Ethereum Foundation. And we are sponsoring the whole season of hackathons. And we've seen some really amazing projects come out by sponsoring them. So, all sorts of DeFi applications. So if your listeners know about DeFi, there's exchanges, there's lending protocols, there's derivatives. Now think of all of that, but with streaming money. What can that mean? Well, we're finding out every hackathon, somebody builds something new, and it's extremely exciting. So we're happy to have got this funding. It definitely opens a lot of doors, and it definitely enables us to grow faster. But at the same time, the only thing that can make us succeed is building a strong community. And that's something we're working on every day. Yeah,
no, excellent stuff. Really look forward to see what comes out of this. So, the idea is that anyone can hopefully come in, join, be inspired and build. Where do people need to go if they want to find out more, and how can, you mentioned the hackathons, how else can they get involved and start experimenting with SuperFluid?
Sure. So our website is superfluid.finance. Our application, so the dashboard where you can actually start sending streams, is app.superfluid.finance. And the best way to become part of the community and come and chat with us is Discord. So discord.superfluid.finance. We like very descriptive names. So that's app.superfluid.finance, discord.superfluid.finance. And if you want to check out some of the hackathon stuff, go to hack.superfluid.finance.
Okay, easily remembered. Rewind if we've missed anything. Francesco, it's been a pleasure speaking to you today. Really super interesting project. So we'll definitely be keeping an eye on it. We'll go and have a little look ourselves and see what we can do. But congratulations to you and the team on closing the round and for the work you've done so far. And we'll hopefully get you back in the future to hear about your progress. Thanks very much.
Yeah, thanks for your time, Paul. It was great. And I hope we keep growing, and you know, the community will coalesce around us, and hopefully next time I can tell you about some of the amazing projects that are being built on SuperFluid.
Absolutely, will do. Thanks.
All right.